Well, we got a little bit of surprise on the GDP number this morning. It came in at 2.2% growth for the first quarter, when most of the experts thought it would be about 2.7. And to remind you, it was 3% the GDP growth from the fourth quarter of last year. So 2.2 is a little bit disappointing, even though the market's up this morning. So they're not responding too much to that. And last night, Spain's debt was downgraded. The market's not really reacting to that too. It's being pretty resilient. The market's being pretty resilient at this time, which is a good thing. Hopefully, you can say that. Earnings have been so strong. Amazon reported last night. A lot of the big companies reported this week. It's been so strong compared to what the anticipation of the earnings were going to be, that it's giving support to the market. The market is finding comfort in that earnings are growing. And even in the GDP number, even though it's disappointing at 2.2% growth, it's still growth. And inside that, consumer spending was up 2.9%, which is 70% of our economy. So consumer spending actually was much stronger than the overall number. So, there's signs that we're still growing, we're still struggling. Not great, but still struggling forward. Durable goods numbers this week were very disappointed, down 4.2%. Okay, most of that was due to transportation, airplanes and things not being ordered, but still, down 4.2% was much bigger than expected. Even if you took out transportation and military spending, which is kind of erratic on a month-to-month basis, it was still down 0.8%. So it was still a little bit disappointing. On the other hand, pending home sales was up very strong compared to the expectations, up 4%. You can tell we're getting a mixed signal on the economy, mixed signals. Some things look pretty good, some things don't look so good. But it does kind of tell us that the economy is still struggling forward. It's Europe that's really the headache. Yeah, you can say China and India are also a headache because their growth is slowing down, but I don't think we should worry about them. They have plenty of room to expand. At least China does. They have plenty of cash. They can loosen up. They can do things. Whereas Europe can't. England fell into recession again. They don't have a lot of room to expand. They don't have cash. They can't print more money. There's things they cannot do that China has total freedom to do. So I'm more worried about Europe, and especially with if they can't get their growth in line, that just makes their debt look worse. There's a lesson to be learned here. You can't overspend forever and think it's going to work. It does not work. We have to learn that lesson here in the United States as well. Now, concerning the earnings season, we've had about 173, earlier this week, 173 S&P companies reported out of the S&P 500. 78% have beat their expectation, which is a rather high number. But I will remind you that the expectations were lowered all month, all quarter long, so the game is being played to beat the expectations. But it's our job, your job, to understand that that's the game. We're moving into the weaker months of the year, and I think what you need to expect is volatility. The market may not fall. I'm sure there'll be corrections, but I think you just need to be a little bit defensive. Not be out of the market, but be a little bit defensive, and that's the position we're taking.
The Invest Talk Update is a monthly briefing that gives you a snapshot of the past month's market, along with other useful perspective and information. You'll see important articles like Protecting Your Investments Against Scam Artists, excerpts from Steve's book, links to the month's Invest Talk talking points, plus news of upcoming Invest Talk events in your area. And it comes free each month to your email box. To get your subscription, just go to investtalk.com and click on the icon at the top of the page.